Welcome to Discover Daily. Today, we explore top stories from Perplexity's Discover feed, covering Adobe's AI music innovation, a cryptocurrency exchange's challenges, and Warren Buffett's latest wisdom. We've got a lot to unpack, so let's dive right in. We're starting with a leap into the future of music creation. Adobe has introduced a new prototype called Project Music GenAI Control, which is designed to simplify the process of creating and customizing music, even for those without professional audio experience. This tool allows users to generate music based on text prompts, such as happy dance or sad jazz, and provides integrated editing controls to adjust repeating patterns, tempo, intensity, and structure of the generated music. Users can also remix sections of music, create repeating loops, and extend the length of audio clips to suit various content creation needs, such as podcasts or animations. Developed in collaboration with researchers at the University of California and Carnegie Mellon University, Project Music GenAI Control is still in the research stage and does not yet have a user interface. Adobe is taking a responsible approach to the creation of this tool by training it on data that is under license or in the public domain to avoid intellectual property issues. Additionally, Adobe is working on watermarking technology to help identify audio produced by the tool. As of now, Adobe has not provided a release date but the company is expected to share more information at its upcoming summit event in Las Vegas, starting March 26th. With the advent of AI tools like Adobe Control simplifying music creation, how might this shape the future landscape of music production and the role of artists in the creative process? Next, we turn our attention to a significant hiccup in the digital currency world. Let's unpack what happened. Coinbase, a leading cryptocurrency exchange, experienced a significant outage today as Bitcoin's price surged, briefly surpassing $64,000. The outage was attributed to a large surge of traffic that overwhelmed the exchange's infrastructure, leading to connectivity issues and many users seeing a zero balance in their accounts. Coinbase CEO Brian Armstrong cited the sudden influx of users attempting to buy, sell, or trade Bitcoin as the cause of the server overload. Despite the temporary disruption, Bitcoin's price remained resilient, quickly recovering to above $60,700 after a sharp decline to approximately $59,500 following the outage. This incident is not the first time Coinbase has faced outages during periods of intense market volatility. Similar disruptions have occurred in the past, drawing criticism from users and industry observers. However, Coinbase assured its users that their assets were safe and that the team was working to restore normal operations. The Bitcoin rally that led to the Coinbase outage was part of a broader surge in cryptocurrency prices and related stocks. Bitcoin's price increase was largely driven by excitement over a series of spot Bitcoin exchange-traded funds that began trading in January 2024. This enthusiasm also boosted the prices of other cryptocurrencies and related stocks, with significant gains reported for major crypto trading venues like Coinbase Global and Robinhood, as well as Bitcoin miner Marathon Digital and Bitcoin holder MicroStrategy. The outage at Coinbase occurred amid technical issues as the exchange's website and app crashed, preventing users from accessing their account balances. The exchange acknowledged the problem and initiated an investigation to determine the cause and resolve the issue. Speculation about the outage's cause ranged from an influx of dormant users returning to the platform amid the market rally to concerns about a potential hack, though the latter was not confirmed. Considering the repeated instances of outages during critical trading periods, how might this affect the long-term trust and reliability of cryptocurrency exchanges like Coinbase in the eyes of investors and traders? Our final story of the day brings us wisdom from the legendary investor Warren Buffett. Buffett's 2024 annual letter to Berkshire Hathaway shareholders, released on February 24, 2024, is notable for several reasons. Firstly, Buffett pays tribute to his longtime friend and business partner, Charlie Munger, who passed away in late 2023. The letter also provides insights into Buffett's investment philosophy and Berkshire Hathaway's performance. Buffett emphasizes the importance of not being swayed by market pundits. He uses his sister, Bertie, as an example of someone who is sensible and instinctively knows to ignore pundits, suggesting that if someone could reliably predict market winners, they wouldn't share this information freely. He advises that when investors find a truly wonderful business, they should stick with it. He cites Berkshire Hathaway's long-term investments in American Express and Coca-Cola as examples of patience paying off, despite occasional missteps by these companies. Buffett warns against the stock market's increasing resemblance to a casino, urging investors to adhere to a long-term investment strategy and avoid the temptation to make quick turnovers. He stresses that Berkshire Hathaway's rule is to never risk permanent loss of capital. Buffett also reflects on his first stock purchase in 1942 and the importance of having a majority of one's net worth in US-based equities. He reiterates the importance of owning wonderful businesses at fair prices rather than fair businesses at wonderful prices, a shift in strategy advised by Munger. The letter discusses Berkshire Hathaway's prospects, with Buffett suggesting that the company should perform slightly better than the average American corporation with less risk of permanent capital loss. He also mentions Berkshire's significant ownership in Occidental Petroleum and its interest in the company's oil and gas holdings and carbon capture initiatives. Some financial highlights from the letter include Berkshire Hathaway's return under Buffett at 4,400,000% versus the S&P 500's 31,000%, a $168 billion cash pile, and a significant increase in interest and other investment income due to higher interest rates. How do Warren Buffett's principles of investment resonate with today's investors in an era of rapid technological change and market volatility? As we close today's episode, remember, the quest for knowledge never ends. Dive deeper into today's topics with the Perplexity app, available on Android and iOS, or visit perplexity.ai. For links to more information, check the episode description. Thank you for tuning in. See you back here tomorrow.